Hey guys, so there's one company that is not participating as everyone expects in this rally. It might do a little bit of good for the continuation, the bullish continuation, if this company joins. So I'm going to talk to you about it today. Also, I'm going to share my best levels that you want to pay attention because it makes a lot of sense for you to recharge your call options at those levels going into September. Why not October? And there's one more company that I want you to pay attention because it's a little bit of service that is becoming very organic, very natural for people. But back in the days, this company was something amazing. It was something new. It was the age of the internet. There's a lot of activism in playing in the scene of this company. So it might have an opportunity and you want to pay attention. Hey everyone, this is JR from the Market Surveillance Alliance, and it's Monday, so I wanted to take the time to reach out to you guys and share what I'm paying attention, what is our community doing, and how you can also have the opportunity to take advantage of it, okay? So let's take a look what's happening in the markets, and let's go for what is happening with the S&P 500. Now, the chart system I'm using is TradingView. It's free. Just a tip, have an idea. It's free, so no excuses. And the levels I'm looking right now, I want you to pay attention to this. It's the full candle from last week. So first off, the orange moving average is an exponential. It's the 20 exponential moving average. And what it's telling me is that we have a strong close above it, so that a lot sort of guides me to look for buy opportunities. And as you can see, we have some pullbacks. Pullback number one, pullback number two, and then there you go, up we go. Now, again, in this level today at the beginning of the week, we have a sort of little pullback all the way to 4,245 points in the S&P 500, and there you go, up we go. Now, this is nothing new. We know we have a couple calls last week in our community. We do have a Telegram group, which is called MSA, Market Surveillance Alliance Live, and we are very active there. A lot of people coming into the group, and we pick ideas. We have specific targets, entries, and we sort of knew this direction of the market, so we actually bang on those. Some people took 100%. Some members took 45% in less than 48 hours, so that was pretty good. Now, when it comes to understanding what is happening, you have to keep in mind that there's a shift in expectations. Now, as I said in one of my videos, we are not out of the woods. It's nothing to be celebrating. Still, it does look better than before. That's the most important thing. It does look better, and the market is a mechanism of anticipation to expectations. And a lot of what is happening is that things are not that bad. I repeat, things are not that bad. There's a couple guys kind of projecting that in order for the U.S. to be in a full recession, there's a number of states that have to be struggling, and that's not the case. You can actually think that there are two states right now. I don't remember the name of my head right now, but there's only two names that are actually in recession or they're a little bit struggling. So I always keep in mind as well that the U.S. has in excess 2.3 trillion in savings. Now, not everyone is doing great, okay? I don't want you to think that everyone is doing great, but it's not as bad as journalists put it on paper, or even when Jim Cramer talks about it, like the sauce and that kind of stupid thing he did the other day on Mad Money. But hey, he gets paid $5 million for all that nonsense, so that's good for you, Jim. But when it comes to realization is, people sell you in fear. The idea is, yes, you need to protect yourself. You probably need to exit some positions, and you also need to play the down when the market's falling apart. You can buy a few puts. But you have to think that when everyone is doing the same, when everyone is hedging, when everyone is bearish, the time has come to go in the other direction. So that's what we have. Levels that I want you to pay attention. First off, top of the candle of last week, that will be 4,279. Once we lose that, we go into the middle of the range. Why? Because in the middle of the range, if we go to the S&P 500 daily chart, we have the 200 exponential moving average. So you will have a very strong support there, and that's my red horizontal ray at 4,181 points. So pay attention to that level. And finally, well, you always have to go back to the mean. reverse to the mean, which is a very common strategy. I think it's commodity trading advisors, CTAs. They use that strategy, and at some point it happens. It doesn't have to happen right away, but rest assured, at some point we all go back to the liquidity level at 4,121 points. So those are my levels for the S&P 500. Now, there's a company, you know the name, and not a lot of people, a lot of people think it's a value play. Facebook, whatever you want to call it, Zuckerberg. It's actually Facebook. So Meta platform, ticker META. Now, guys, listen. Everyone, if you're new to trading, it's true. The number one apps, I think it's a group of 10 apps that everyone is downloading. You have Facebook, Instagram, and I think it's TikTok number one. So when it comes to understanding why a lot of people think it's a value play, and remember, value sometimes translate into traps. Yeah, more like a bag holding. It's a serious trap. And you get there waiting for the market to realize the value of the company, and it never happens. The only difference is that there's this gargantuan amount, a huge pile of cash that Facebook still has, and they can work with that, okay? And this whole concept of the meta universe, it's a lot of being like an ungrateful rat, because God gave you the universe. You can go enjoy Mother Nature. Now, but the humans, based on their human condition, they're always complaining. They want the meta universe. They want something fake, something created by man. That's kind of hilarious to me. So, guys, enjoy life. It was given by God. Enjoy everything you have. So, coming back to this whole thing is, okay, it is not participating as it should, because it should be participating, by the way. As you can see, we're out of this structure. Let me just bring it back. This is the structure I'm working with in Meta. And I think like we are outside, so there's a potential continuation. And at some point, it's just going to join the rally, the market rally. And that will take us to 220. 220 is not difficult because this is a daily chart. And whenever you see that green moving average, that's the 200 exponential moving average. So pay attention. Value play or no value play, they still have a lot of cash. They can play with that. And absolutely, it's outside the bearish structure. If it were to be that over this point under 141, a different story will be to play. But I definitely will be looking for 220 call options, and it will give me sort of good timing. So if you're looking into probably October, that wouldn't be a bad idea, because the market potentially will be facing a pullback. So you want to use that to participate in this potential move, at least 27% upside in Meta platforms, ticker META. Now, another company that used to be wow, and it used to be a crowded trade. It used to be the trade that everyone was playing, long PayPal, ticker PYPL, PayPal Holdings. Now, same story, not complicated. And I like to use these sort of basic moving averages, exponential moving averages. And we have the 20, orange, we have the 200, green, and we go from one side to another. So no surprise is if by the end of the year we see trading PayPal at 124 or above 24, potentially closing this gap all the way to 176. I'm not joking. These companies have a lot of clients. For some small businesses, PayPal is still a valid way to actually accept payment. And although I think sometimes they're a little bit behind the curve, there's always an opportunity and always a way for you to maximize your client base. Big gap here. I wouldn't say all the way up, but I would say at least same as Netflix is facing. I would say 151. Do not be surprised if the market keeps grinding higher. This will be something that PayPal can easily do. In my case, I will take probably something very close to October, probably again 125. Call setup for you to play this game. Guys, this is my Monday video. I wanted to share some ideas. I wanted you to have a clear vision of the market. Technically speaking, definitely, if I look at the S&P 500 from the monthly version, just to have final words, what's happening. If you look at the monthly chart and you plot a 20 exponential moving average, you will realize that we are in a bull market. I'm just trying to pull this chart. There you go. I'm going to use my OANDA data and take a look at the monthly. And as you can see, there's no question about a recession based on two negative GDPs. That's fine. But markets tend to change and we have to adapt. And the reality is that until proven otherwise, the market is still in a bull mode. So take advantage of the opportunity. Pullbacks are your friends, and you want to buy on red days. Guys, again, thank you so much. Hey, if you liked the video, hey, why not? Just smash the like button. Make sure you subscribe, because I will be bringing these ideas, clear ideas for you to participate and make the most of your investing, especially when you're using options. Because at the end of the day, never forget, someone always knows.